Let's kick things off with a tweet. Sellers of stocks will not find better alternatives over time and will return to the stock market at much higher prices. We thank these people. We'll buy your stocks and hold them for now while you're scared. Personally, I think the assertion is slightly off. Replace stocks with crypto, and we've got a spot-on tweet we can harken back to throughout the ups and mostly downs of this bear market. Sellers of crypto will not find better alternatives over time and will return to the crypto market at much higher prices. Thank these people. We will buy your crypto and hold them for now while you're scared. Hello, I'm Crypto Casey, and welcome to another episode of Crypto This Week. Every Sunday, we explore the latest global news stories affecting the crypto markets, as well as the ever-changing macroeconomic environment of the world at large. This video is sponsored by NordVPN, a virtual private network service provider. More on them in a bit. Wednesday AMA or Ask Me Anything on my Instagram stories is back by popular demand. So be sure to scroll down to the description area below to access my only official social media profiles. Anything not listed here is 100% a scammer that will message you and ask you for money or crypto. So beware and stay vigilant in these crazy times, crypto fam. Awesome. Let's hit Crypto This Week. The lifeblood and necessary evil of the global crypto markets is a project with a history plagued with sketchiness, Tether. And despite all the FUD, or fear, uncertainty, and doubt, all these years, Tether has endured many trials and tribulations and has come a long way. Its most recent test came last week when the Tether supply plummeted $7.4 billion amid depegging concerns after the Terra collapse. Could Tether go bust and bring the entire crypto market down with it? Well, anything is possible. Just last week, we experienced likely the most devastating fallout from a large market cap project. With Terra, it's looking more and more like the creators did not have good intentions all along, while with Tether, it seems like they are committed and want their project to succeed and remain a staple in the space. Tether's $82.4 billion reserves exceed market cap of USDT. Tether quarterly report indicates that it is still fully backed by cash and cash equivalents, including commercial paper and US Treasuries. The world's biggest stablecoin has just released its quarterly transparency report a day before the deadline of May 20th. The report indicates that Tether's reserves were $82.4 billion as of March 31st, which exceeds the amount required to redeem the digital tokens issued. It is important to note that this report does not cover the past few weeks' volatile events. Nice. Though Tether seems to be on a path to righteousness, since the Terra debacle, people have started fleeing to a competitor that has trailblazed the path to stablecoin transparency. The big winner from the crypto crash? USDC stablecoin. Every market, including a bearish one, has its winners and losers. As UST was headed for zero, and USDT, Tether, was processing billions in redemptions, USDC was padding its market cap. At the start of the crash on May 8th, USD coin had a market capitalization between $48 billion and $49 billion. After an almost imperceptible dip, it began heading upward on May 11th and now sits at $52.26 billion, near its all-time high of $53.6 billion set in March. Sweet. So when it comes to stablecoins, I prefer and trust USDC the most. And sure, I use Tether when I need to, but if you are parking funds on the sidelines, safest is US dollar, and stablecoin-wise, it's USDC. And it's looking like a lot of people are fleeing to cash for the past several months. More than $7 trillion has been wiped out from the stock market this year. The meltdown of 2022 has wiped out more than $7 trillion in market value from the blue chip stocks in the S&P 500. The index is down nearly 18% since the end of December. The S&P 500 is now barely above bear market levels, which is a 20% decline from a recent closing high, following a 0.1% drop Thursday. And briefly, the S&P 500 slipped below bear market threshold. The S&P 500 on Friday traded below $3,837.25, the level that marks a 20% pullback from the large cap US benchmark's January 3rd record close. A finish below that level would meet the traditional definition of a bear market. So stocks are at a bear market threshold. And crypto, for now, still mirrors the stock market activity. So what can we expect from crypto this bear season? There's more crypto destruction to come, says blockchain.com CEO. Peter Smith, CEO of blockchain.com, says creative destruction is ultimately helpful in consolidating the crypto economy. And there are weak protocols, assets, and investors still to be exposed after the recent market volatility. It's going to take a few weeks, if not months, to see the effects of a really brutal 2 or 3 weeks for crypto, he told CNBC. More pain is coming, Smith says. More risk will be exposed, but ultimately, it's a good thing for the decentralized economy. For the crypto investor, he says the lesson of the past few weeks should be back to the crypto equivalent of the traditional market investing concepts of dollar cost averaging. Slowly building a position in an asset over time so all your money isn't exposed to any single bout of volatility. And you need to be prepared to hold it for quite some time, Smith added, because we're still in really the nascent period of building this whole finance system out. And if you've been following this channel, you already know these key crucial facts we need to accept and embrace. 1, there's likely more pain to come. 2, the best thing we can do is dollar cost average in. And 3, the biggest point that most people, for some reason, refuse to accept and refuse to believe, we are still early. Sure, crypto has become a multicellular organism, but we are still an amorphous creature, barely crawling out of the primordial ooze when it comes to adoption and development. And if you don't want to accept and embrace that fact, not belief, fact, then please kindly sell us your crypto so that we can emerge from the ashes of this bear market like phoenixes on top of the next bull cycle. And then maybe we will sell you back the crypto at a higher price when you're not scared anymore. Or maybe we won't, and we'll continue to diamond hand into oblivion. The choice is yours. And if you want to ride out this bear market together, make sure you check out my bear market series where we cover strategies and plays that help people become millionaires in bear markets by clicking on the link above. And whether or not you've been stacking sats or are new to the space, as a crypto investor, using a VPN is an easy, effective, and important way we can further protect ourselves and our investments. VPN, or virtual private networks, prevent people, companies, and software apps from watching and tracking your online activity, which as a crypto investor can protect you when you're connected to public networks, as some hackers have ways to steal your data when connected to public networks. My personal favorite VPN provider is NordVPN. And if you use the link below in the description area, NordVPN is offering us their 2-year plan at a 70% discount with 1 month completely free so you can try it out. This works out to be about $3.70 per month, the price of a cup of coffee, with the benefits of protecting your privacy and your crypto investments. It's extremely easy to set up and very user-friendly, which is great whether you are new or experienced in technology. You can pay for NordVPN services in both fiat or cryptocurrency, so be sure to scroll down below to redeem their offer. Nice. Let's check out some exciting Ethereum updates and wrap up with some bullish adoption stories from the week. The testnet merge would allow developers to work on any potential risks or bugs ahead of Ethereum's move to a proof-of-stake network. Ethereum's Ropsten public testnet will undergo a merge next month ahead of a rollout on the main network, developer activity on GitHub shows. The merge refers to Ethereum's long-awaited move to a proof-of-stake network from its current proof-of-work design. After the shift, transactions on the Ethereum blockchain would be processed and validated by stakers instead of miners, which would, in turn, create a faster and eco-friendly network. Brilliant! So when can we expect the actual merge following the testnet? Ethereum co-founder Vitalik Buterin says the blockchain's highly anticipated merge will happen in August. Of course, there's always a risk of problems. There's also a risk of delays, Buterin said. If such problems or delays arise, the merge might be pushed to September or October, he said. Sweet. So just to let everyone know, this switch from proof of work to proof of stake is still just a phase of the Ethereum 2.0 upgrade, which means there is still another year or likely a few more years before it's 100% complete. Will we see faster and cheaper gas fees once the merge happens? Probably not. We will probably have some upward price movement leading up to the merge, but once it's complete and it's successful, I think many people will be kind of disappointed. It won't be until the sharding phase is implemented, where we should see a massive improvement in the tech. So if you would like to learn more about the Ethereum 2.0 upgrade, you can check out my video guide for beginners by clicking on the link above. Cool. All right, let's end on a high note and rapid fire through these bullish news stories. Bitcoin production roars back in China despite Beijing's ban on crypto mining. Exactly 1 year ago, a global superpower tried to ban 1 billion people from Bitcoin. They've already failed. Bullish. Next, crypto exchange FTX US moves into stock trading. The US affiliate of crypto exchange, FTX, plans to roll out zero-commission stock trading. FTX US will offer no-fee brokerage accounts, commission-free trading, and market and company data. So more stock traders will have more exposure to crypto. Bullish. And if you're in stocks and want to get into crypto, or if you're in crypto and interested in dabbling in stocks, you can scroll down to the description area below to access FTX's correct and official site. Or feel free to pause the video and use the QR code on the screen. Nice. This week, more off-chain industries are moving on-chain. Ernst & Young unveils supply chain manager on Polygon network. It marks the first joint project between the accounting firm and the Ethereum scaling platform. And just a little gem for you guys, with Ethereum 2.0 completion still years away, Polygon, or Matic, has been extremely important in the survival of the Ethereum network and will absolutely continue to be important. And even when the upgrade is done, layer 2 solutions that foster and develop a big ecosystem, like Polygon, will still be relevant and exist once the upgrade is complete. So that's why Polygon is one of the main projects I'm personally DCAing to this bear market season. Cool. And despite the bear market season, money continues to pour into the crypto space. $3 billion flows to Metaverse and Web3 gaming this month, as A16Z tips in $600 million. The move by A16Z marks nearly $3 billion committed by venture funds and gaming industry giants into Web3 gaming or Metaverse projects since mid-April. Venture firm White Star Capital raised $120 million for its decentralized finance, DeFi, and gaming-focused fund, along with a $200 million allocation to blockchain gaming projects by Framework Ventures, both taking place in April 2022. Metaverse projects are also gaining massive sums from gaming industry titans. Last month, Epic Games, creator of the popular Fortnite title, raised $2 billion to create a metaverse with funding from Sony and Lego. Amazing. And in case you missed it, check out my bear market gaming crypto picks I plan on DCAing into by clicking on the link above. Or if gaming seems too risky for you and you want to stick with the big caps, MicroStrategy chief says Bitcoin is going to go into the millions. Despite Bitcoin's violent sell-off, MicroStrategy CEO Michael Saylor is holding firm. The Bitcoin bull said he's in it for the long term and his strategy is to buy and hold the cryptocurrency. Sweet. And we've got more companies adopting. Shopify expands crypto payment options with Crypto.com Pact. Shopify merchants also have access to Jack Mallers' Strike, Coinbase Commerce, and BitPay. And we've got whole industries adopting crypto. Shiba Inu, Dogecoin, and others to be accepted as payment at thousands of restaurants. A new collaboration between major global restaurant software and payment solution provider, Lavo and fintech payments firm Verifone, is set to allow thousands of restaurants in 65 countries to accept several cryptos as a payment method. These cryptocurrencies include the meme-inspired cryptocurrencies Shiba Inu and Dogecoin, as well as several stablecoins in leading assets like Bitcoin and Ethereum. Nice. Our final story gives us some intel into where the industry is headed from an industry leader. Crypto's future is self-custody, dealing blow to exchanges, Ledger VP says. Self-custody is a natural progression of the industry and inherently unique to crypto's founding principles, according to Ledger executive Charles Hamill. The products that the most crypto-forward people are using today will be used by mainstream customers in a year, and by institutions a few years after that, Armstrong wrote. We need to start integrating them today. Ledger unveiled plans to add a crypto wallet extension, Ledger Connect, on Safari that will allow users to connect hardware wallets to Web3 applications such as Ethereum and Solana. We want to reduce the friction for Ledger users to bring their keys to Web3, Hamill said. So if you haven't already, be part of that future now instead of waiting for it to come by investing in your very own hardware wallet. If you would like to check out Ledger's security devices, scroll down to the description area below to access the correct and official site, or feel free to pause the video and use the QR code displayed on the screen. Awesome. Well, that was Crypto This Week with me, Crypto Casey. If you enjoyed the episode, please make sure to like this video, subscribe to the channel, and click the bell notification to stay up to date on all of the latest videos. So how has your bear market journey been so far? Does my bear market video series and Crypto This Week news coverage have you bullish? Or are you still wary of the crypto market and its future? Let me know in the comments below. Be safe out there.